Good morning. It has been something. Absolutely something.
I, I'm going to go with that.
You
Yeah.
know, you know what I have in my head, and I was going to try and grab it, was to start out with Don Henley's song that goes "Kick 'em when they're up, kick 'em when they're down, kick 'em when they're," because that encompasses this week to a T.
Oh, man. Yeah. It's been
It
craziness this week.
it's been
And it all
crazy.
started with what?
SVB.
SVB. Woo.
By now, I'm sure everyone's aware of SVB, Signature Bank, Credit Suisse.
That's
Hey,
Swiss
got a
now.
bailout this morning, $56 billion.
Even Europe wanted to get in on this action.
Yeah, exactly. And then what else did we get this morning? We woke up and jobless claims. Guess what? They fell.
They felt, wait. Didn't they fall
Let's
last
say
time? And then they went up and were revised up. But now they're going to say they fell again. Like, do we just need a little bit of good news? Is that what's going on here? We wanted to try to calm everybody down with some positive news that we'll just revise next week.
what the media might manipulate the news. Are you Joe? Joe, where's your hat? Where's the tinfoil? Is that
I
got
gotta put
tinfoil
that.
in it?
It does. It does. It's lined with tinfoil. It's just to keep me warm.
Oh my gosh. Yeah, it just, the bank failures, and you look at this stuff, and I watched Barry Habib. I mean, so of course, several people
Yeah.
explaining what went on, but you look where they tried to put in these rules with Dodd-Frank to protect from another bank failure like we had in 2008, and
Yep.
guess what? The rules caused the bank failure.
Too much bureaucracy, right?
Yep. Yeah. The rule is that if they take depositor money and buy treasury bonds with it, which they were encouraging banks to buy treasury bonds, right?
Because it's secure.
Secure. But if the bond yield went down, they could still claim full value of the bond on their sheets.
Wait, what?
Yes. That's why when they looked at the audit from I think 2 weeks ago, the audit looked great except for that little sub note way down here, number 15 or 16, whichever one it was. That little sub note down there. It says, well, we are kind of exposed because interest rates have gone up, and if we have to sell, we're going to lose our shirt.
Yeah.
And they did.
And they did.
Yeah. And so what did that do to our lovely bond market? Turn that into a total roller coaster. This is 5 days. That's it. 5 days going back to the 8th and the 9th. And just look at this.
Yeah.
We were up close to 4% on the bond yield. Boom, what happens? Okay, SVB, boom. Okay, they did Signature, boom. Well, we're coming back. We put in the bailout program, right?
Yeah. It's a fun little program.
It's a fun little program. I mean, hey, if I could buy bonds, and say I could only sell them for $80 cents on the dollar, but you're willing to let me loan at 100%, I'm going to take that all day long.
That's a win-win.
It's a win-win. Yeah. No big deal. No exposure for the taxpayers. So, yeah, woo, we saved the banks, the Fed, we saved the banks. Oh, wait, hold on. Europe, Credit Suisse, hold my beer. Let me show you some systemic losses. Boom. Back down.
Yep.
So it'll be interesting today because all of a sudden we got the news. Credit Suisse got a bailout. Jobs numbers look phenomenal.
Yep.
All's okay with the world again.
all is okay. Markets are already kind of stable. We're not seeing huge swings in the MBS right now and the 30-year. It's interesting. I mean, we're seeing improvements on the 30-year MBS, and the 10-year is still down, but it's kind
Yep.
of. Do we see something else happen, and we see another? We trade sideways for the day, and then see another drop. I don't know.
Yeah.
Who else could
got?
join Who else could join? I don't know.
Oh, it just.
Now, what I will say is, for the consumer, this has been fantastic. If you happen to need to lock this week, because
Yes.
what has all of this meant? Holy cow, it's been great for the consumer. We're talking almost 0.5% in 5 days.
Yep.
That's nuts. That's absolutely nuts with what we've seen on rates that we're able to offer consumers, and it's been fantastic. Now, the hard part about that too is, because it's so volatile, we're seeing big these lenders are like, holy cow, where do I throw the dart? So they're
Where do you price when you
later,
don't know where things are going?
And thank you so much, sir. Sorry about that. Gotta get FedEx or UPS. UPS is better. I'm sorry. UPS. Sorry. No, but yeah, it's just been, the lenders and so forth, they're opening later in the day. We're seeing more pauses in availability of rates. We're seeing bigger swings. Some are going out not aggressive. Some are going really aggressive and swinging. So I've seen so much movement and reprices and everything else. And, what we've been telling our consumers is like this whole, if it's good, lock it. Yes, right now is not the time to play, to be like, does it keep getting better and better? I think we will see it kind of bounce back up a little bit. I don't know if we're going to go all the way to where we were Thursday of last week. I think a lot of this news is going to keep it a little bit lower.
I think maybe for the next week, until that 22nd.
Yep.
I think everyone's going to take a deep breath for right now.
Yeah. I think.
Jerome. Because we've been watching the Fed watch over the past couple weeks, and where people are betting, and we were back here a week ago, only 31% were betting we're going to take a 0.5 point jump.
Yeah.
And then when we did our show last Thursday, it had jumped to 81%.
Yeah.
Well, back on Monday, I saw it back down to 30%. Now, this morning, guess where they're back? They're back to almost a 0.5 point jump in the rate.
I think, man, I feel like if we see the stock market, though, do poorly these next couple of days, we may only see a quarter. I'm going to say it. I'm going to say, I think that if we see it, these are the cracks in the shell. This is literally what I think, the Feds want, what Jay Powell wants. He wanted to see this.
Yep.
These events that happened this last week, this was kind of the cracks that they wanted. They were expecting something like this to happen. And what that fallout looks like, that's going to be the question mark. But he wanted to see someone hit this little.
Yeah, because he is in a tight spot, because your consumer price index, your core number, still very strong.
Yeah,
numbers came out on Tuesday, and they were well above where they wanted them to be. So you got that still strong. But
the year over year, though, is down significantly. So we got to give, it has gone down a little bit, but it is still way higher than where the Feds want it.
Yep. Then you got the banks with these bonds that they bought back when the yields were a lot lower.
Yep.
Buying 3-4 year bonds with depositors' money.
Yep.
And if the depositors want that money back, they got to sell the bonds, got to sell them at a loss. But now you got the stopgap, the new program. So I think that's putting a little bit of surety back in, but he can't. That's where if he races them, keeps racing them, that loss for the banks is going to keep getting bigger and bigger.
Yeah.
And that's where you can push, some of these frail regionals over the brink.
And that's the hard part. And you look at Silicon Valley, like they're one type of regional that like they lended to just really risky endeavors, right?
Mm-hmm.
Like, tech startups, this and that, crypto companies, kind of like they were one of the few banks willing to lend to them. They weren't diversified or anything, but like regional banks typically aren't as diversified as big banks. They just aren't, like, because they're the only ones that are willing to be like, hey, we're in a farm area. We're going to lend to those farmers because nobody else will. The big box won't. Like, so they're going to do those type of things. So could we see these kind of kinks start to kind of happen at a higher frequency? I don't know. I think that's why the Fed stuck. Like, if the Fed didn't do what they did over the weekend, which, like, I'll give them kudos. Like, the Fed did some work over the weekend. Like, I mean, I'm shocked. Like, I mean, I know it's tough for them to have to make a couple phone calls on a Sunday. I most of them probably haven't done that in 20, 30 years. I don't know. But I think they had to. Like, they had to. But that's where now I'm sitting there going, okay, do we see more? I don't know if we're going to see more. Hopefully we don't. We have a society now that panics about toilet paper. So I really don't want to see what happens if we do have multiple banks start to have some issues, because there will be a run on the bank. So hopefully not. The one thing that I remind a lot of consumers is like, hey, like, remember, like, you're protected to 250,000 federal. Like, very few people have more than that exposure with the bank. And the other side of that is, like, the reason why there was a run at Silicon Valley is because these are tech startups that, like, if you're a business, you don't want to lose $1, and there's no way to get that back. Like, if I had $1 million in the bank and I was only protected to 250, I'd be like, nah, screw you. I'm pulling everything out. Like I get it. Like, so I don't, but what does that entail for us on the grandiose scale? We're going to see. It's going to be really interesting. I mean, I know that you pulled up the 10-year Treasury, the 10-year, and what's really cool is, and I say cool, is we started today below the 200-day moving average.
Yes.
But we've been bouncing off of the 50% fib, which I'm getting really technical on this for the last couple of days. We did it a couple weeks, back in January, we kind of were, started. So do we see a move back down? Maybe, but we can also see a shift back up really quickly. So it's going to be interesting to see what happens over these next couple of days. And I think we will, like you said, it might cool down until that 22nd, because that's when what's going to happen with the bonds, with the federal fund rate, on if they're going to raise it. How much are they going to raise it? They're going to raise it, right? Like 50 is probable. It definitely won't be more than 50.
No, a lot of people were like, well, he's going to have to pause now.
So I still see, like, I laugh. I think there could be 25, 25 bips could be it. Like, I don't think that this event was the type of credit event that would cause a change in what they're going to do. Like, it would have needed to be a much bigger, and this was a pretty major event, but I still think it would need to be, if, Silicon Valley was what, like the 14th biggest bank?
16th.
Something like that, 16th biggest bank. If Silicon Valley was like the 7th biggest bank or 6th biggest bank, I'd be like, policy's changing. But I think 14 was just, they're big, but they're really not. I mean, JP Morgan Chase has about 10 times the assets, 12, 13 times the assets as Silicon Valley. And you're like,
Yeah, it's just, it's funny when you sit there and you're thinking about, okay, if I was in Vegas right now, what way am I betting?
I'm betting on something. I'm losing, but I'm betting. Oh man.
So from the 50,000 foot view, that's what we're looking at. That's everything we're looking at. But then when you come back down, and do the 1,000 foot view, the 10,000 foot view over Orlando, we're still sitting strong. We're still sitting strong. when we get into our numbers, you're seeing that. So, our inventory, we dropped about 51. And really, this is the biggest thing that is driving the market here in Orlando
It's just
is where other areas they're seeing their inventory continue to shoot up. It's not us. It's just not us. We're holding, but we're sure as heck not going up. And you're
Mhm.
seeing it again in the pricing.
Yeah.
We've steadily decreased the amount of discount that sellers are willing to give
Yeah.
on
And
properties.
we're just hitting buyer season, right? Like
Yeah,
we're just hitting.
just hitting buyer season. I had a busy Friday. I had 3 clients put in 3 offers on Friday,
Mhm.
and 2 of them, both went over list. They were in that $200,000 to $300,000 market,
Mhm.
and one of them called the agent, said, "I'll be sending over an offer." We got done. It was like 5:43. Got home, about 6:30. About 6:45, had almost the whole thing typed up. Go back in just to double check something on the MLS, pending. I'm like, no,
No.
no way. So I called him up and like, hey, Scott, did you accept an offer? It's like, yeah, I had to. We had to. It was just so much over list. We had to take it. I'm like,
Wow.
whoa, okay. Then I had a condo over here in Altamont Springs, $240,000 appraisal wise. It was looking 230, 233, but my gentleman was willing to go to the 240. And we're like, okay, yeah. He's like, should we go higher? I go, no, I think we're okay at 240. You're putting down 100 and something $1,000. We're
Mhm.
coming in very strong. They let it hang out till Monday, and we ended up losing that one. Went over what they listed it at.
Yeah.
And it's just like, wow, I don't want to get into those again. Oh, please. Please, no. That is absolutely no fun. So anyways, when we look at our pricing, again, medians, we're not dropping our median pricing. We fluctuate week to week, but not a whole heck of a lot.
Yeah.
Our sales, of course, we did drop a little bit because week after end of the month, but we were above the average again.
Yep.
And this goes back to what our rates were.
Yep.
The sensitivity of the rates. I think we're going to see over the weekend, we're going to see more people come out because, oh, I can save 0.5% on my interest rate. Let me lock and shop.
Yeah.
Then this is what I expected too. A drop in our average days on market. We went from a peak of 68 pretty much the beginning of February, and we've dropped 8 days.
Yeah.
We're still kind of high at 60, but to drop 8 days in about 4 weeks, that tells you that people are out shopping.
Yeah.
We're getting into that spring shopping time. And then at least it's not dropping as much as it dropped here. We lost about 50 homes, in inventory, and not too bad, but I'm expecting this number to drop even further.
Yeah, that's going to be a tough one because I think, where I'd like to see it around 4,500, where I'd be happy with it.
Yeah.
I don't want to go above 4,500 right now. I feel like, but I definitely don't want to see it at 3,500.
Yeah. I think if we were at a 4,500 with where the rates are right now, it'd be a pretty balanced. You're going to see a little bit of wheeling and dealing.
Yep.
But, not what we saw back in November when we had, 5,500 in inventory. You were going in, we were going in super aggressive at that time.
Oh yeah. You were asking for less. like, offering less than asking for, 3-4% of credits, and then you were getting it.
And you were getting it. Yep. Yep. Because people just felt like, oh, the market's, and you had all that news, of the doom and gloom of the housing market. So everyone was feeling, that, oh my gosh, if I don't sell now, I'm not going to be able to sell.
Yep.
Which wasn't true. So, I mean, you get into the condos, same thing.
Almost
less of a discount than we've seen over the past couple months, and our numbers are consistent again, and so's pretty much our median pricing.
Mm-hmm.
So it's interesting when you look at the 50,000 foot view, and then you come back down into that 10,000 foot to local.
Yep.
That Orlando's been very isolated compared to other markets.
Yeah.
And very fortunate. Very fortunate.
Absolutely.
So if you're out there looking, this week is not a bad time.
No, it's not.
It really isn't.
It could be a good time to pull the trigger.
Yeah. I mean, seriously, reach out to Joe, get pre-approved, lock your rate.
Yeah, we can explore lock and shop, like the opportunities there, and it makes sense right now because we don't know if it's going to stay this aggressive. And that's the hard part is, I think everybody is carefully, we're all carefully floating, if that makes sense on our side. It's kind of like we might be able to squeeze a little bit more, but we're all ready to pull the trigger and lock lock everything ASAP. On Monday I had my entire team. I was telling my entire team, if you got something floated, lock out Monday. Because I was like, I don't know if it's going to get much better. And, Tuesday got a little bit worse. Then Wednesday got a little bit better. Like, we're still like, it's hard to predict. And that's what I was telling like our sales guys are like, well, maybe, and I'm like, guys, unless you're watching this every single minute, you might miss it. And like, you may see that drop and then it could come right back and you missed it. And guess what? Investors aren't like, even when we see the drop, they're holding back and they're being like, let's see what happens. Do we get some pullback? Because that's what we've been seeing. You looked in the trend reports, like you get the down, then you get the pullback and it comes back up a little bit. So these investors are pricing up like a little bit stronger, waiting to see what happens, let the dust settle. Then they'll make another improvement. That improvement may not come till the next morning. And by the next morning, we may have lost everything and it may be worse.
Yeah.
So, and that's kind of
that news comes out at 8:00 at night. Oh, this bank just did something bad, or, oh, we revised the job numbers and the job numbers are now here as opposed to here, or we revised the CPI. So it's difficult on your side, because people want you to have that magic crystal ball.
I want it too. If I had that crystal ball, I'd be rich. Might just start calling me Barry.
I still think he's wrong.
We'll see. We're gonna see.
Yeah.
But thanks so much, Brendan. A lot of awesome stuff this week. A lot of fun, and some very serious moments. But seeing how the Fed kind of adjusted to it, pivoted, and them responding quickly with another bailout. Not shocker, but I'm glad they did because it did stabilize a little bit. We could have seen a much, much worse fallout than what we did.
Yeah, we could have. So, all right, everyone, take care. Enjoy the rest of your week. Happy St. Patrick's Day tomorrow.
Hey,
you know what that means?
At least one.
Yes. Take care. God bless. Bye-bye.